For our first presenters, first we have Liz Armbruster, who is a Senior Vice President of Global Compliance at Avalara. She brings 20+ years of demonstrated success and operational experience to the global tax compliance company, which is headquartered in Seattle, Washington. She is an engaged, trusted, and high-performing leader who focuses on automation, scale, and efficiency. Next, we've got Nicholas Richards, who's a partner with Greenspoon Marder. Nick is a tax attorney with over 20 years of experience resolving IRS and state tax audits, trials, and tax debt. Again, Nick is a partner with Greenspoon Marder, which is an AM Law 200 law firm, where he has developed a specialty in cannabis tax matters, entity structure, M&A, and BSA compliance. And the group this morning is going to be moderated by Raj Basi, who's a group tax manager at Microsoft. Raj has more than 15 years of global VAT and GST experience, providing business with commercially driven, multi-jurisdictional indirect tax advice, strategy, and support. Raj has delivered global indirect tax solutions for multinational businesses across a range of sectors in the startup, operational, and business life cycle stages. So I'm going to jump off and turn it over to you guys.
Thanks, Bill. Good morning, everybody, from a very soaking wet Redmond, Washington. We're here today to talk about the impact of COVID and how it may affect and alter the future of taxation. So I'm going to turn it over to Liz and Nick to kick us off.
Absolutely, I'd be happy to. Thank you for the introduction from Bill, and great to be here with you, Raj, and with you here, Nick. Lots to talk about today. As we've witnessed, from the onset of COVID, early spring, through, seeing the impacts across state and local governments, across our businesses that we serve at Avalara. And often, I think about the change of the future from an automation perspective. And thinking about how we have interacted in the past with state and local governments, with international governments as well, and what that looks like from an automation perspective going forward. So looking forward to sharing some thoughts on that. Nick, I'll hand it over to you.
Thanks, Liz. Yeah, I think it's, we've kind of got some new funding out there and some maybe new tax things, but we also have a big new landscape that we're all dealing with. And speaking to people, speaking to tax authorities, getting timely communications and all of that kind of stuff is a new challenge in my practice anyway. And I'm not so sure I'm that good at it yet, to tell you the truth. I think it's something that we all have to work with every day. So I too am excited about this topic, and hope so. I learned some things from you and Raj.
Excellent, thanks. So I think maybe we start by just setting the stall here. So, what are we seeing in terms of post PPP and other COVID relief?
Yeah, I think I'll go first, Liz. I think that that's a big question mark right now, and with the change in administration. There's questions around, what will happen with the folks that maybe got the PPP that maybe shouldn't have, or maybe, technically qualified but later didn't. And then the question around the forbearance of employment taxes and whether or not that's going to be forgiven under the new administration, or whether you're going to have to pay that back in the new year. If I recall, I don't have it right in front of me, but I think that was due in April or May of next year. And some real questions there around, gosh, what if that employee is no longer with me? What if I didn't collect withholding or collected it and held it, and now that employee's not there to pay it back, and some things of that sort I think are all questions that people who availed themselves of those programs are now trying to figure out.
Perfect. And Liz, before we turn to you, it looks like we have our first polling question up. Okay, and it's
interesting.
Are you seeing expanded taxability in your industry? So we have 39% saying yes, 36% saying somewhat, 18% not at all, and 7% I don't know. So any thoughts on that, Liz?
Yeah, I think that's actually a really interesting segue for some of the impact that we're certainly seeing, right? You think about the fact that governments are facing budget deficits, and how are they going to make up those shortfalls as they roll into finish this year and then roll into next year. And certainly taxability is one of those areas. What can we tax that we haven't taxed before? What can we tax differently that we're already taxing? And so I think that's an interesting topic that 40% of our audience is already starting to see that. Obviously that's something that we stay abreast of at Avalara across the multiple tax types that we serve, from a calculation and returns and just overall content management perspective. And certainly some of those areas that are probably more popular in the media, streaming tax would be an obvious one. I know that there are some localities in Indiana and in Texas, right, that are trying to right now impose franchise fees on streaming platforms. There's some other legislation in Maryland around digital advertising and services, right? Trying to attempt to tax digital products and advertising, and then also considering taxation on other services like accounting services. So, not surprising there. I'd take that probably one step further, and one other area we're seeing that pop up. And in part, as you think about the consumer impact of COVID, we're all buying differently than we have in the past. And so grocery and delivery would be another area that was probably just a very small segment, food delivery in general, a smaller but growing segment. And all of a sudden, here we are 8 months later, and I can tell you, my parents, who are both over 70 years old, haven't been to the grocery store since the end of February. Number one, they figured out how to shop online. It was easy enough for them who, they're not technically really adept at navigating applications or anything on their phone. All of a sudden, they're getting groceries delivered every week. Haven't stepped into their local Safeway since then. So taxability, expanded taxability is certainly a big change that we're seeing.
Liz, I wonder if part of that question was because of the new administration and fears that taxes are going to be raised. Certainly, I think that the 21% corporate tax is a big question now for everyone. And when that tax was lowered, it sort of incentivized some people maybe to switch over to being taxed as corporations, C corporations. And now maybe they're wondering if that was a good move or not. And so I think that's a big thing on the horizon that we'll look at. When you mentioned your parents, and now then now they're good at shopping online. I got to say my kids are now learning the skills of a computer as well, and it's been frustrating, but I think there's good lessons in that for them. And so it's we're all trying to I'm trying to see the silver lining there a little bit, and keep convincing my wife that she's doing a great job.
Yeah, I'm sure she's
things to learn.
Yeah, exactly. It's tough. But I think that's an interesting segue. It's not necessarily about tax, but again, the whole way we've shopped over the past 8 months has had a significant shift. And as consumers, we are in the customer experience space, we talk a lot about how consumers have so much power. And, all of a sudden, now you've got brands competing for online purchases, and you have to expand to markets that typically aren't tech savvy. And so the ease of use and the competitive ease of use is now something that a lot of brands have to spend time looking at. Make the app simple so kids can buy, folks that are a little bit older, again, who aren't so tech savvy can also easily navigate. It's a fascinating space, and certainly one that will be long lasting.
And you have to think it really increases the need for state and local tax advice and experts, with us all shopping online and maybe not paying sales tax some of the time. Now we all have potential use tax obligations. And, so far in my practice, I haven't seen that hurt individuals. Maybe that's a new area where the governments will start looking. If you're a business and you get audited, you're going to end up paying your use tax for your U-line purchases or wherever it is you're buying your materials and supplies without paying taxes. But usually individuals they kind of get away with that, and you wonder if they're going to start thinking more about that.
Well, yeah, I mean, that's a whole nother topic. More changes, more enforcement, right? What does that look like? Expanded taxability. I mean, there's lots of different directions we can take that conversation. But yeah, I mean, I absolutely agree with you. I think that, states are going to want to consider, if possible, again, depending on how long we're all still operating from our homes, how much enforcement they can do. Number one, what do they have the budget to do? They need the money, but they got to spend the money to go and do it. So they're going to have to find ways to go and capture the tax they're due, let alone expand on net new taxes and ensure that they can enforce that.
Yeah, and I think taking that one step further, that's something we've certainly seen on the global stage, certainly from a global indirect tax perspective, with an increase on taxation in the e-commerce and digital space.
Oh, without doubt. Yeah, without doubt. And that's an interesting segue too, Raj. When you think about, the influence and impact of Wayfair, right? So the decision back in 2018 and the impact that's had on businesses around, the U.S. and others selling into the U.S. even. There have been changes to the thresholds that have been set. States have changed that. And I wonder if others might be considering doing, I think it's Kansas that doesn't even have a threshold. Like economic nexus applies to everybody. So it's not a number of transactions. It's not a number of a total sales, for example. They just put a 0 bar in there and say everybody's got to be compliant with it. But we have seen states already, since the implementation of their law, change their thresholds and bring it down. And I'm wondering if other states might consider looking at that, going from a $500,000 threshold, for example, to 200, or lowering it to 100, maybe even to 0.
Another thing that comes to mind is people are becoming more flexible with where they can live and work. And, that can change the landscape on taxes, and it can also change, domicile and residency, which is an interesting topic. I live in a state where there is a state income tax, and I know that when people try to move to lower tax states like Texas or Florida or stuff like that, the state generally tries to say, hey, wait a minute, we don't think you surrendered your domicile. We think you're still taxable here in Colorado. And so I've been getting calls from people about, hey, how do I move in the right way and affect a new domicile in a new state so that I don't have that problem in 2 or 3 years? And there's a number of things that you have to sort of do. It's sort of an all facts circumstance test, and it has to do with intent. And if you do it right and go and do the things like you should do and get your cars re-registered and new licenses and driver's licenses and doctors and all that fun stuff, then you're probably going to come out well on that. But for those of you that want to hang on to your your family home in that state and go and live in some other spot, maybe you've got another home or something like that, that's actually a pretty technical thing to do right.
Mm-hmm. Yeah, it's hard to do right. It's a challenge for businesses too. I mean, think about where, for example, with Avalara, where we, have offices and where people might want to work otherwise. And, for tax reasons that may or may not be possible or beneficial to either, the individual or to the company. Clearly, we're not the only company in the world facing that challenge. Many, many others are as well. And I think it will be something for many companies to consider, and that many will need advice on as they continue to navigate what the future of their workforce looks like. I don't know that that anybody will go back to exactly the way that they were before. There are quite a few tech companies out there that have already said, hey, listen, we're going to go all remote. We're never going to go back into an office. I think probably, balance will find its way, and more companies than not will have many that work from home full time, and many that are still coming back into the office. But these are some complex conversations for people to have as we go forward. Not an easy subject to tackle.
Okay, Liz, we now have our second poll. How quickly do you think governments will step up enforcement of tax collections or compliance? Now, next 3 to 6 months, 6 to 12 months, or not at all? So let's just give it a moment or so to collect the responses.
Raj, I might give a little background on that. Tax enforcement is kind of what I do. And
perfect.
We saw a full suspension of tax enforcement when COVID first hit. That extended through the extended due dates, and that tax enforcement was an extension on 2019 due dates and taxes on 19. But informally, they also suspended collections on all outstanding taxes. I happen to have talked to some IRS officials, and what they tell me is that suspension is no longer out there. And I've even heard of some training that's been going on in the IRS about how to collect taxes from certain industries, but I still have not seen anyone get levied, and I'm knocking on the table here.
So interestingly, that's a great segue into the results of the poll. It's 6 to 12 months, looks like the majority response, 63% have responded that they expect to see enforcement being stepped up within 6 to 12 months.
Mm-hmm.
Well, just as businesses are trying to find their way through working remotely, so is the government. And so how they actually go and figure out how to do that enforcement is a challenge for them. Is that a hybrid in the future? Is it more digital than what it was before? How do they do that cost effectively? All challenges they're going to have to face. So I think I happen to agree with the respondents who said it's going to take some time for them to figure that out. At the same time, as we mentioned earlier, with budget deficits and, the shortfalls they're going to have to overcome, they're going to have to weigh those two equally and figure out what that looks like.
Yeah, and do we think that's also in part due to a number of deferral mechanisms that were announced shortly after the COVID pandemic struck?
Yeah. And the government all went home, right? And so they stopped working. And so they're way behind. I think I heard in, I want to say June or July, that the government gets something like 250,000 IRS, 250,000 pieces of mail per day. And when they went back to work in June or July, they were starting on late January. So
yeah, yeah. I mean, you're right. We experienced the same kind of, Nick, you mentioned something earlier too about just being able to contact people, right? That was a real challenge. They're navigating, trying to get home. We didn't know how to contact people. Response rates weren't great, et cetera. But for many countries that we deal with in Europe, the post just stopped. And they said, we're not accepting even anymore. We couldn't FedEx registration packets, for example, for new businesses seeking registrations in countries. They just wouldn't accept it any longer. And so that has subsided, but the backlog is tremendous. And it's interesting to see the shift and who's making it a long-term shift to go from what was a physical hard copy document that had to be, that was a requirement, for example, for registration, to countries that have shifted to digital. And are they now processing those digital registrations faster than what they were from a hard copy perspective? And it's a little bit unfair to assess the turnaround yet, because there is that backlog they're still having to work through. But I think that's one of the automation changes that would be beneficial for everyone if it stuck going forward. But again, that's going to take some time. You don't automate things like that overnight for many tax authorities.
Liz, I can't help but add that time is good for taxpayers, right? That the IRS and state governments have limitations on how long they can enforce against folks, and every day that goes by that they can't take enforcement action is a good day for a taxpayer who owes a taxing authority money.
Yeah, that's interesting, Nick. So kind of a turn on question for you as you deal in that area. When I think about the mass of small sellers, right, for example, that have to be out and compliant with Wayfair laws, right, for example, versus the marketplace laws that are out there now. So, and the ability of a taxing authority to go after a singular marketplace versus the thousands of sellers that are on that marketplace, it would certainly seem from an efficiency perspective, you go after the marketplace. And in similar thinking, you go after businesses that are larger. Do you think that's a fair assessment of how enforcement will look going forward? And maybe if you're a smaller seller, you can skate for a little while?
Maybe. So I think those are kind of two different things, auditing and how are they going to target audits to different industries and different taxes. I know when the audit statistics are a little skewed in the IRS because of ease of auditing things like earned income tax credit and things like that can be computer audited basically. And so that's sort of a new thing that has really kind of ramped up for the IRS. And I want to say in the last 20 years or so, to where they are really looking for low-hanging fruit. And then the states, of course, are doing that as well. And I'll mention the cannabis industry. That has been a targeted audit industry for 2, 3, or 4 years now in every state that's legalized it because of a numerous amount of taxes and new taxes, difficult taxes and difficult code sections like 280E means that there's a lot of tax to find there. And when a business gets audited for, let's say, sales tax, those are package audits, right? So they also tax you for occupancy tax and use tax and every other kind of tax out there. And so they get a lot of bang for their buck from those audits, I think.
Yeah.
And Nick, are you seeing a huge impact in terms of delay on audits right now?
Yeah, every auditor is a little different. You're always dealing with the personalities, and some of them are happy with the delay. Others think that they can't have that, And so I've had sort of a little mixed bag on that. I think that one of the things I have noticed is that maybe people are looking for easier ways to resolve cases as opposed to just digging in and finding every last penny because, they don't want to take all those boxes home with them. So I'm starting to see some audit settlements that are more sort of, okay, tell you what, that are more sort of, we used to see these in the old days where there's a lot of horse trading and I'll tell you what, I'll give you 70% there. And, and it was just this sort of down and dirty and you had it done in a half hour. And I'm seeing that more now. And maybe that's a factor of necessity for them.
Mm-hmm.
And Liz, same question to you, except on the compliance side, are you seeing delays on the compliance side as a result of audits taking longer?
Well, for us, let me just narrow it down to the sales and use tax side. So, we will support, customers who are using our service in audit. And I don't know necessarily, I don't know that I'm seeing delays per se. I think the frequency of requests coming in to help support, data, transactional data that maybe the auditor is asking about is a little bit less frequent in the past several months than it has been prior to that. And I would expect that trend to continue. I know I talked with some internal folks a couple of months ago, and certainly from their perspective, as they deal across a multitude of taxing authorities, the general theme was there was a bias to, a little bit of speed, maybe as Nick was saying, and maybe a little bit of horse trading, maybe a little bit of, I wouldn't go so far as to say leniency whatsoever, but just a different dynamic than maybe what we'd seen in 2019 and prior.
Perfect. And we're actually at our third polling question. Do you expect regulatory changes to impact consumers and businesses equally? Yes, more business impact, more consumer impact, no impact, or don't know.
Hey, Raj, I might say that I'm not sure that the states and the feds are on an equal playing field when it comes to dealing with people in this. The IRS pre-COVID, you would never get emails from them. It was an absolute taboo to email, but the states always did. And so in some ways, you got to think the states are a little bit more able to pivot to our new normal.
Then we have our polling results back, and the majority of respondents, 55%, answered more business impact. So Liz, Nick, do you want to speak to that?
I think, Nick, you were speaking to that a little bit earlier, just in thinking about that from a federal perspective, if you want to jump in.
Well, and what I was saying is I was contemplating whether the authorities would look to individuals more for some of the less obscure, more obscure taxes other than income taxes. And I find the question interesting. I'm not sure that if businesses are affected, consumers aren't also affected in the same with the same thing. It's an interesting question. I'm not quite sure what to think of it, to tell you the truth.
Yeah, I mean, again, I don't know which way I would have answered that. I kind of feel like equally, similar to what you said. If the business is, I think the consumer is also. But along the lines, Raj, of what we were talking about earlier, we are seeing an uptick in the type of products and services that are being taxed, and I haven't done the research to see yet. Actually, it's an interesting question to look at how much of the content is changing from an actual rate perspective. Certainly we have the data to go back and do that, but I would expect that over 21 that we're going to see a steady ramp up in that, impacting consumers. Just in, again, as economic nexus continues to take such a foothold. It used to be easy a couple of years ago, now not so much. And as more businesses become compliant with that of course impacts the consumer. One of the other things I think interesting, you've got so much experience in VAT. When you think about e-commerce in general, COVID's been a forcing function for more businesses to move into the e-commerce space. If you were a little mom and pop shop and, you operated in Redmond, Washington, and, you had a nice steady flow of business and you had to shutter your doors, all of a sudden, many of those businesses shifted over to an e-com presence. And, maybe they were selling online, maybe, they had considered going to marketplace, but many with, this as a driver have done that. And not only do they now have a market that's open, maybe in the US or whatever their, locality is, but they can start selling international as well. And now have to be compliant with all kinds of other fun tax issues that they hadn't been when they were just selling in their little locality, or maybe just to residents in the state of Washington, for example. Now you've got cross-border to deal with, and potentially based on the size of your business, maybe now you have to get familiar with VAT, or vice versa, right? If you're familiar with VAT and now you're selling into a US market. So a lot of complexity for sellers to have to deal with. And, certainly from a professional services perspective, that has also expanded the need for tax specialists, right? Taxation folks in the services industry to all of a sudden have to ramp up their knowledge if those businesses that they're serving are now looking at a global footprint.
Liz, do you get questions from people about, hey, is it even worth it for us to sell in a foreign jurisdiction because of these complex taxes, or does that come up?
From time to time, I wouldn't say it's, the number one question that we get, but yes, as businesses are looking to expand, it's oftentimes more of the question we get is, what does compliance look like? And then it becomes a question of, hey, how do the numbers pan out?
Yeah.
but there's just so many businesses are so unfamiliar with what taxation looks like outside of their region, that's the knowledge gap they have to cover first. Just even understanding what it is. I mean, it's hard enough to, to understand, state and local taxes, with the complexity that they are with upwards of 12,000 taxing jurisdictions in the US alone, right? Trying to keep that straight is crazy. Let alone let me go into a new tax regime and understand what that looks like. And then how to get from one to the other, right? Just the cross-border piece of it can be really complicated for customers. And a lot of times they just, they'll throw up their hands and say, no, not worth it. I'll deal with the complexity at home. I'm not ready to tackle that yet. But, that's again, where automation can help, and that's part of what we do.
And equally, a lot of robust planning. What's good in the EU from a VAT perspective, for example, may not work in an APAC jurisdiction, may not work in LATAM and Canada. So it's all about very much understanding the market you're selling into, the rules, as well as, of course, understanding the relevant legislation in that particular jurisdiction.
Yeah. Right. Yeah, quite a bit. And there's, in the EU specifically, there's so much changing in the next several years. That in and of itself is going to be challenging for a lot of sellers to have to deal with. I mean, let's start with Brexit and go from there.
Yeah. And speaking of Brexit, Liz, did you want to take a few moments to touch on any thoughts on that?
Just, again, from a complexity standpoint, just thinking about sellers that have used the UK as a gateway, whether they're, here in the US or others, that's a significant change for them to think about, where do they now have to be registered and what are the tax implications of that? Be really interesting to see what the first quarter to first half year. I mean, we're coming up on the deadline where businesses have to be compliant, and tax is never simple, and this one's not exactly simple to handle. Trying to get clear, like I said, on where the registrations needs to happen, what the new compliance rules are based on what they're selling, where they're selling, et cetera, is a bit of a headache for many businesses.
And speaking of headaches and complexity, a great segue into something I think we all wanted to address here is the home office deduction. Obviously, COVID has had an impact on that. Nick, any thoughts there, please?
The IRS hates it. They want to audit those home office things all the time. Although, the last one I had, somebody had convinced these folks that not only could they take their home office deduction, but they could deduct their whole house if they installed a water filter on their kitchen faucet and then went into business of potentially selling water filters so they could take the position that they were testing the filter out and they could deduct their kitchen for that reason. And, it's just, it's I don't know. I try to talk people out of it.
And we're about to launch our fourth poll, but yeah, if you could provide any further thoughts on the home office deduction, that would be great. Actually, we're at the poll now, so let me go ahead and read that out. What would you say is the approach the majority of states or jurisdictions in which you remit tax have taken from the outset? So cutting expenses or programs, offering loans, implementing tax deferral measures, other, or don't know?
Hard to say. I mean, states and jurisdictions have done all, right? So it really depends on where you are and where you're doing business, or what your familiarity is. It'll be interesting to see what these results look like.
It certainly will.
I know early on, stateside, there were so many states that offered, from a sales and use tax perspective, deferral of either your tax return filing or the payment, or both. Not all, but many did that. And most of them concluded in and around June, July, right? Kind of when the federal reprieve had ended as well. But interestingly, a lot of the tax relief or the relief efforts in Europe continue, and around the globe. Anybody that's got VAT, that's a rate change, right? That can persist. So seeing that very differently in different parts of the world.
Yeah, and we have our results in, and the majority actually say don't know, so 35%, followed by 32% answering in favor of implementing tax deferral measures, followed by 24% saying cutting expenses or programs.
Kind of an all of the above mix, as we predicted, depending on where you are.
We saw a little bit of all of that coming from at least the IRS early on. I don't know if they cut expenses or not. I suppose states have actually, laid people off and stuff like that. I haven't heard about that. The IRS is already terribly understaffed. They can't lay anybody off. Yeah, it's and you got to wonder where they're going to go. I know that our governor is calling a special session of the legislature to address the COVID upswing here in Colorado for next week, and so it seems like there's some new things that are on the horizon for a lot of us as well.
Yep, and it's certainly interesting in the deferral world, because these are deferrals. At the end of the day, it has to be paid back. And Liz, what have you seen in terms of the uptake in deferrals and the impact on a business's compliance?
Yeah, I was really surprised. When the deferral programs first came out, we had, some very vocal customers that said, yes, please, right? We absolutely want to do that. But the take rate, if you will, on that, as we looked back at the data, actually wasn't as high as what I thought it was going to be. There were so many nuances to it. As a business, maybe even doing just business in 5 states, it could look really different across all 5 states, right? Some who were deferring payment weren't deferring the interest on it. So there was a fee if you were deferring, but you're right, everybody had to pay at some point. And I think in part due to the complexity of managing it, making sure that you did at a future period make that payment and or file the associated return to it, many people just said, forget it. Unless it was just absolutely necessary to, use as a bridge for operating expenses, and they would pay it later. But I would say overall, I was surprised at the small number of customers that we have that elected to use those deferral programs.
Yeah, I think that's true. And I would say, I think it depends on what kind of tax it was. I think the deferral options for employment taxes and I suppose if there were some states that were deferring sales and use taxes, boy, there's personal liability on those, right? And so if I'm a business owner, I am not deferring those taxes. Forget it. Income tax, if it's my company's income tax, that maybe is a different story. And that's a fairly cheap loan at about 3.5% interest right now for federal income tax. And so maybe that's a different analysis as to whether you're willing to defer that one or not.
Yeah. I have a question for you guys, just in thinking about what the shift has been like for each of us and everybody that's been on the phone with us for the past 45 minutes, in thinking about, their ability to work from home, what access to automation, connectivity, et cetera, that they've had. It's been an indispensable part of our ability to continue to work. And I know, Nick, probably you're in the office, but you might be the exception to the rule for most of us who are still in our home space. But my question is, how quickly do you think, because that's been such a large driver for so many businesses, to think about and consider and implement automation as a way to ensure that productivity stays high. Do you see that happening with the government? Do you think that there's that same kind of impetus to move towards automation and an influence of technology in that, or do you just think that's not maybe as viable because of the dollars available?
I haven't seen it. The IRS will now send you a secure email. It only works about half the time. And it's sort of silly that they think that, mail and faxing is more secure than email, but maybe it is, I don't know. But there are other, they now have the ability to do that. but there are plenty of them that won't do it. They say, "Oh no, I'm not allowed to do that," and I say just as many think they can't do it as think they can. So I'm not enthused.
Yeah.
Yeah, I think globally it's a slightly different picture. I think some jurisdictions, certainly in the UK, HMRC, have been good adopters at communicating securely and electronically. You can do a lot more now as part of the Making Tax Digital efforts there digitally than you could in the old days. So I think there's certainly a slightly greater embrace of technology across tax authorities globally in some jurisdictions.
I think that's a great point, Raj. And I think, you know, not that I would go so far as to say the HMRC was ahead of their time. They're still catching up, right, from a technological perspective. But
I
they
used to work there, so perhaps that's my bias, but there we are.
but they were ahead of the COVID curve, right? So, I mean, they were well into MTD, you know, long before we were into a global pandemic. So good for them. You know, they had certainly embraced the opportunity that digitalization provides. But there are several of their other neighboring countries not so far forward, right, in their thinking. You know, as I think about the example I was giving earlier about registrations, you know, sometimes for some countries, you have to show up with, you know, documents signed in blue ink on a Tuesday between 1 and 2 o'clock and hand them to, right, the agent.
Mexico being a great example of that recently.
There you go. Yeah, there you go. So there are many countries that are still operating like that. And I have to believe that while they maybe don't have the dollars yet, maybe, you know, don't feel the necessity, the rest of the world is going that way. And, you know, if they want to get closer to the point of transaction, if they want to ensure that they're collecting all their dollars, they have to go this way.
You know, you got to think that it probably impacts, you know, poorer, less privileged folks with less access to technology. You know, can you even pay your taxes now if you don't have a computer and you can make an electronic payment? Can you go in and walk into the customer service line now and talk to somebody and get help? And you know, there's a number of sort of practical difficulties now that we're all experiencing that you know weren't there before.
I mean, that's a great point. And if I think about the localities in particular, right, in the US who still have paper functions, you know, pay by paper or remit by paper, pay by check. Yeah, it might be for those reasons. And they're kind of the stalwarts in moving to technology, but in part it's because their base doesn't have the ability to pay electronically, right? That's just not easy for them. They don't have access to computer, et cetera. So, but yes, many who have made the shift, it will pose some challenges and some difficulties for taxpayers.
And even just mail delay now, right? I mean, you get a time sensitive notice. You know, there was many months going by where I would get notices that were 4 months old, just showing up, you know, and time sensitive notices. And the IRS and state are generally giving you the time. Oh, you just got that? Okay, we'll give you another 30 days. There are some notices that they can't do that with. And so that's a real practical problem as well.
It is, especially when interest is accruing, right?
Only 3.5% though.
Okay, we're approaching our final poll. Okay, so are you impacted by international tax changes? Yes, for Canada and Mexico. Yes, because of Brexit. Yes, globally. No, US only, or don't know.
Where's the yes, all button?
I think maybe that's yes, global. We'll take that as that. Just give those responses a moment or two to come in.
It seems like with our change in the world, we're all impacted in one way or another. I don't really deal with those kind of taxes, but what about individuals that have accounts in other places and stuff like that? That comes up in my practice a lot.
Yeah, so we have the responses in, and we have 52% no, US only, followed by 19% global, followed by 19% Canada and Mexico. So a good spread there.
Mm-hmm.
Yeah.
And something to, of course, keep an eye on. You know, as we all know, tax changes every day. My job would be a heck of a lot easier if, and I think all of yours would probably as well, if we didn't see the frequency of changes. But that's part of the, you know, that's part of the environment that we all operate in. And to be responsive to that is part of the obligation that we have, you know, to our clients. And it's challenging, but I would expect that, you know, the environment that we're in today with global pandemic, you know, not having necessarily an end in sight, great news about, you know, about the pharmaceuticals, but, you know, nonetheless, nobody can predict the future. So I would expect this to continue to be turbulent and will require our diligence to stay on top of changes that are happening, not just here in the US, but around the globe.
I wonder if we'll become less global as a result of this, or more global. I mean, we're certainly trending towards more global, but you wonder if this is going to reverse that trend a little bit.
Interesting thought, perhaps. You know, as I was mentioning earlier, just the boon that people are feeling with an enablement to sell to more, right, and expand their footprint. Maybe that complexity, maybe the frequency of the changes, maybe just the nature of complexity of tax in general may draw that back to the other side, and the teeter-totter may balance out.
All right, so we're almost at time. We have about 9 minutes left. So any concluding thoughts before we open it up for questions?
Nick, you want to go first?
I mean, you got to think there's some good and some bad, right? I think it's, you know, certainly the working from home is good because we're all realizing that we can do that. As I speak here from my office, I sort of realized I had a hard time doing that. But I think that I would love to go a couple days at home, a couple days in the office kind of thing. And now all of that seems a lot more possible now. You know, you got to wonder what happens to commercial real estate and our city centers and everything else. But I try to look on the bright side of things. I don't think business, for me anyway, I don't think it's slowed down at all. It's just become sort of more challenging to figure out how to be stay relevant and continue communicating with your audience. And, you know, we don't go to seminars and hang out in the hotel lobby much anymore. But the webinars have been great, and it seems like it fits that niche pretty well.
Yeah, I think just on the heels of those comments, agree, first of all, with you. And if I were to thematically think about that, it's just really about adaptability. You know, we have had to be so highly adaptable in 2020 and very rapidly, right, to make the shift to home. And you know, as Nick demonstrates, some of us have figured out that might not be the greatest place to be super productive all the time, but maybe the balance in between. But we are still adjusting, and we will continue to adjust for an extended period of time. You know, in our work-life balance, physically where we are choosing to work and live. And that will have impact on businesses in the world of tax as we go forward. You know, just because the global pandemic comes to an end doesn't mean that the challenges we face in the world of tax come to an end. That will be ongoing for quite a bit of time. So yeah, the advice I would lend all of you is remain highly adaptable, having that flexibility and curiosity to explore and think about doing things differently is your friend.
And, you know, I think we always want to think about, oh, how does work from home affect my work? And it also affects our home, right? And so there's that part of it as well, and being sensitive to that. And I think that, you know, even those of us that work full time are maybe more involved at home now, because we might have children at home all the time and learning from home and all those kind of things. And so it's really both sides of that question that we're having to deal with. And hopefully,
yeah,
we'll come to know our loved ones and love them a little bit more during this time.
Yes, you're right. I have a coworker who says all the time, you know, it's not we're working where we live, we're living where we work. You know, for those of us who are full-time home, and And that's a different spin on that. And it's very challenging for a lot of people to feel like they can make that separation and get a break. And we talk a lot about that across my leadership team and the leadership team at Avalara. And I know other companies across the globe are thinking very similarly, because without that separation that a physical job that you can go to affords you, you have to be the owner of that for yourself. And, you know, while yes, you have access to your family, you know, if you're fortunate to live in that environment, and that's wonderful, and I have thrived as a result of that, it is also very easy to stay locked right in here in front of my computer for excessive periods of time, and that's not healthy for people either. So finding and striking that balance and ensuring that you're putting in your own guardrails to make sure that you can be as productive and that you continue to love your job is really important. And that is something that people have to kind of self-manage.
Yeah.
Some great thoughts there. Thank you both. Okay, let's open it up to any questions, please.
See this little chat box here.
Hey guys, too, this could be a great opportunity. If anybody wants to kind of jump in during the Q&A and actually have your face be seen, you can also raise your hand virtually. I think Liz, Raj, and Nick provided a lot of great insight from a taxability perspective and kind of the changing landscape. You know, I know sometimes the Q&A can get a little more dynamic when everybody pops into the screen here. And we do have, you know, roughly 15 minutes of networking after as well. So if anybody wants to join in and ask some questions for these guys, I know Nick was even, you know, Nick was mentioning even the home office deduction, right? Which I know that impacts all of us.
You still get to take your mortgage though, you know, that's the thing. And what do you got? A little bit of electricity in that 10 by 10 space you're working in, and you know, what are those things that you would be deducting, you know? And I don't know.
No, I mean, I think you guys, I mean, again, as a recruiter here in the Bay Area back in 2008, you know, transaction taxes, indirect tax, never really gotten too spoken about. And now fast forward to 2020, and it's probably the hottest topic for all my clients, right? I mean, they know, you know, things are changing, landscape's changing, technology's changing, you know, where is the taxable transaction? You know, as a recruiter, I think I sometimes appreciate it because it's the one side of tax that I think I somewhat understand. You know, but, you know, yeah, I mean, it's just constantly continuing to change, right? I'm sure for you guys, the minute you think you're on top of it, all of a sudden there's another twist,
changes.
Right?
Yep, it's constantly changing.
So we have a question from Bridget. What are you seeing in the digital product space? For example, how are local or states taxing PDF, software, or video content that's downloaded?
Great question. It is changing all over the place. I mentioned, you know, a couple of states in particular, Maryland, Indiana, Texas, that have active changes going on right now, considering how they look at taxability in those areas. I know that in our communication space, for example, you know, that is something that our content experts are actively doing research on, you know, you name it, day to day, because it is changing. And I know that's also happening quite significantly in Europe as well, looking at, you know, digital service taxes, downloading, you know, software, et cetera, is a very hot topic in that space as well.
How do they enforce that?
Great question.
I mean, if you're getting audited and they're looking for digital transaction taxes, where do they look? You know, what do they generally, they take everything on your general ledger, put it on a spreadsheet and say, prove you paid sales tax, right? And if you can't,
right,
you pay use tax. What do they do for those transaction taxes?
I would imagine they'd have to be looking at, you know, again, downloads. The vendor, right, has got to have records of what that is, and it's depending on how it's taxed. I would think that they would be looking at, you know, downloads in a period and application of tax. But again, it's a great question, and I think everybody's doing it differently.
If I went to my clients and I said, you know, give me a printout with all your downloads on it, I'm not sure that would happen. Right?
Yeah.
What?
Right.
Where's that on my computer?
Yeah. Yeah, great question.
All right, great. So I think we're
I've got
at
a
time.
question. As more and more employees are remote, and a lot of times people had gotten some kind of amount from the company for commuting, an MBTA pass or some other kind of commuting pass, but now people maybe are transitioning to maybe wanting to help pay for your Wi-Fi or your cell phone or something that is your personal expense, but you're using it hopefully not more than 90% for business, but maybe you are. Is that something that you see being a de minimis benefit that they won't go after you to tax you on? Or do you see more companies being willing to offer that and not having to worry about whether or not there's a policy in place or how much that amount is by month? Does that make sense?
Mm-hmm. Does it come down to whether your plan provides for it or not? When in the audits that I handle, when you've got an unreimbursed employee business expense or something like that, they always want to see okay, well, let's see your plan, right? And it makes me think, well, do we need to update our plan to make sure that it includes those kind of expenses?
Yeah, Nick, I think you're right. I mean, I know that the companies that I have talked to, tech companies in space and just dealing with, considerations in the HR. Yes, I think the policy is where most go to, and a shift in that as you think about, again, what the footprint of what your employee base is going to look like, the full-time, maybe the hybrid, as you suggested, a couple days in the office, a couple days not. And then those that maybe would be full-time in office. Yeah, I think they have to go back to those policies and relook at what they're considering paying for versus not.
I wonder what our question asker, I wonder what she thinks. I didn't see your name. I'm sorry.
I come from a small, had been in public accounting, but most recently working for small businesses. So the fact that we even had a policy in place was like a huge success. Mm-hmm. And, we kind of wrote it with maybe like, less than $200 a month for certain employees of the company, whether or not it would pass muster. I don't know. But I was just curious, what sounds like bigger companies obviously have more extensive policies in place.
They just told us, hey, go ahead and take your computer home if you need to.
Yeah.
And take 2 monitors and
right.
You've got everything right you need. Yeah, we want to make sure you can work. Yeah, I mean, one of the other things I think I would consider in this is that the timing around policy changes too, right? Because again, if we, as a company are contemplating what the future of the employee kind of workforce looks like with regard to where and how frequently they're working in those places, we don't know what that's going to look like yet. So to make a policy shift now seems a little premature. So I think many are likely to keep what they have with thoughts and considerations of what the future might look like, but aren't quite ready to make those changes yet.
Yeah.
Yeah, I think this goes back to what we were saying earlier about adaptability and fluidity. I mean, it's an evolving and changing situation, and business has to obviously move with that.
That's right.
Again, anybody, I know Raj, Liz, and Nick kind of wrapped up the chunk of their presentation, which was fantastic. I mean, this is a great opportunity, guys, to jump in, raise your hand, and you've got a lot of experience here on board from a transaction tax perspective. I'm surprised I haven't seen, where's Tammy and Bridget? Usually they're, front and center. But no, I think it was great, guys. And hey, listen, as a recruiter, I get a lot of these questions too, right? The work from home, remote, what are companies going to do? Obviously the pandemic keeps pushing, right? We're probably in the Bay Area another 6 to 9 months out of virtual. But these are things employers, some of my clients have, those collaborative cultures. They're fully going to go back to the office environment when this thing passes. Other ones have kind of, from a tax department perspective, have realized, wow, we can do this, right? We can do this remotely. Maybe I can hire someone in Denver, for a Bay Area job. But for the most part, it's an ongoing conversation. But I think
Save
that's
some money, maybe, yeah.
But then that's the other thing. Some people are concerned, right? Will the income, let's say, or the compensation that companies in the Bay Area are paying, will they be adjusted based upon where they hire the person, right? If they hire someone, let's just say in Boise, Idaho, right? Are they going to pay, competitive with Bay Area comp, or are they going to pay localized, right? So it'll be interesting to see how it plays out.
A few companies are already talking about that. Raj, you could probably comment on that. I think Microsoft came out with a statement about that anyway. They're saying, go where you want to go, but we're going to pay you what the market in the area is.
And do some companies that are looking at the possibility of hiring remote be concerned about triggering Nexus? I mean, it obviously triggers Nexus, and maybe if they have maybe not wanting to broaden their Nexus footprint.
Without doubt, that is a consideration that companies are facing today. That has to be balanced between what does the company want versus what does the individual want, and that's not an easy question for some businesses to answer.
Particularly globally, if you have staff working in other countries, are you creating a permanent establishment and creating a tax base there, for example?
That's right.
And then it's further complicated if I just was reading that a woman that was in Paris, it's cheaper for her to go rent and live someplace outside of Portugal or some nice, more resort, less expensive city, because she's not going to be back in her home office for a while. So then really what's your tax home? But I think Nicholas was speaking to that earlier about, changing your license plate and all of those other things. But it does bring up a lot of questions.
It does. And I can imagine for people with familial obligations or a desire, right, to not want to be alone if they can be with their family, but their family is somewhere else. Yeah, that creates some complexity.
It's easier to establish a tax home than it is to abandon a tax home.
Mm-hmm.
So you may establish a new one, but you might not ditch your old one. You don't do it right.
Yeah, no, I think this was great, guys.